Okay, cool. We'll get started. We've given people enough time. So this week, there's nothing really to discuss in terms of anything new. Tariffs are still presenting to be a big driver in the markets. Obviously, when I say a big driver, we're seeing a large amount of uncertainty. But there are still fundamental factors we can account for. It's more a case of managing risk around the headline news. There isn't anything else we can do. So you've got two options. You can either trade as you normally would, which obviously accounting for fundamentals, technicals, whatever you do is fine. And obviously be very vigilant of what's coming out of the White House or the US in terms of tariffs, and be fast to manage risk if necessary, or just don't trade. And obviously not trading isn't really an option in my view, because what you're going to do, just not trade for the next 4 years? Not really possible. So let's have a quick look. This is the euro-dollar matrix. Obviously, I trade euro-dollar specifically. It's my bread and butter. So this is the matrix I use just to keep track of the fundamentals and sort of the core things driving that market. So without accounting for the tariffs or necessarily, without accounting for tariffs and retail sentiment, euro-dollar is very bearish in my view. So the economic data for the US is pretty flat. There's nothing overwhelming here. The European data, however, is pretty bad. GDP missed. We've had manufacturing PMIs missed, services PMIs missed. Unemployment rates also ticked up. So not great for the euro. In terms of central banks, we've still got the divergence here. We've got the real rate still favoring euro-dollar shorts. So just to quickly explain that, a real rate is essentially when you take away the current rate from inflation, and that gives us a real rate. So essentially, if you hold money in dollars, yes, you will benefit from the interest rate of the US, but you're also losing value due to inflation. So that's how you get that real rate of how much you're actually getting when you account for both of those things. European Central Bank is obviously very widely expected to cut their rates in the next June meeting, and their stance is dovish, obviously. So that's a negative impact here on the euro. The Fed's expected to maintain rates. They're still cautious around tariffs. The long-term effects haven't been realized yet, and inflation is cooling, but I don't think that's enough really to drive a rate cut just yet. So we're expecting the Fed to hold, and we're expecting the ECB to cut, giving us that nice central bank divergence. The leveraged funds. So leveraged funds is part of the COT report. So this tells us what speculative leverage traders are doing. So we want to be paying attention to this. So we can see the US dollar, or they've been adding into the US dollar. They had one period here on the 13th of last month when they did reduce positions. However, since then, they've had 2 more consecutive weeks of adding positions. The euro is actually just flipped bearish, which is good for us. Obviously, if we get a flip from institutional traders being long euro, flip into net bearish, that's a great sign for us. So that brings me back onto euro dollar. I'm going to maintain my short positions. You can see here I've been DCAing this quite aggressively. If I just show you the trade history here, you can see I've had to cut 2 trades in a bit of a loss, but that's the whole point of DCA really. Adding in at higher prices, bringing the average price up. So I'm quite happy to maintain short. I don't see a reason to cut this trade yet. The only real risk for this, to be honest with you, is tariffs. So in my view, euro dollar is way too expensive for the current situation. I mean, I've just shown you the data. The data is not good for euro dollar. So the only reason I view that the only reason I can justify euro dollar being at this price is defensive positioning. Obviously, investors taking money out of the dollar, put it into the next liquid asset, which is the euro, bolstering euro dollar and maintaining it around 1.13. But that's not really an issue for me. As long as I can manage the positions around tariffs, I'm happy to just sort of continue shorting. So that's that really. And if we do see sort of the conclusion of tariffs, then I would expect euro dollar to start coming back down as we see a repricing, people selling off the euro, rebuying into the dollar, and that sort of rebalancing in the markets. The next one on my watch list is euro pound. I really like euro pound actually. So some of you who pay attention to my content often will know that this is a beautiful market for mean reversions. So we very often have, hold on, I've just got this, there we go. We often have these really nice spikes here on euro pound where we can see the market. I mean, this is the weekly time frame. Let me put it down to the 4 hours actually. 1 second here. Here. Yeah, so we very often have very aggressive spikes on euro pound to the upside, which presents historically great opportunities to then go short after. So if you identify every time this happens and then look at the reaction once that's digested, we often come down lower than the pre-spike price, which is what I would expect here on euro pound now. Now, the fundamentals for this are also aligned pretty perfectly, I will say. As I just said, we've got the ECB cutting rates. And actually, let me just pull up. I think Euro Pound was actually listed in our weekly research. Let me just make sure before I speak on that. Let me pull this over so you can see. Yeah, here. So Euro Pound. Remember, these are not my trade ideas specifically. These are derived from the bank reports we send out. So the ECB is widely expected to cut rates in June, while the Bank of England is delaying its first cut, waiting on wage and services inflation to cool. So we've got that central bank divergence. We've got the historical market behavior. So I think this is a great position to look to take, to be honest with you. So we've got two options for entries. We could be aggressive and look for an entry here off of this 200 moving average and a retest of this previous structure level, or we can look for what I normally like to pay attention to, which is these fib levels. So we can look, obviously, if we draw the fib from the high to the most recent low, we can look for this 50% retracement and then the continuation lower. Now, as I said earlier, this market has a behavior of coming lower than the previous spike level. So rather than targeting the low down here, we could actually look for a level around here for a take profit. So I will be looking to execute and send the signal for this trade next week or this week. But again, it's more a case of just waiting really for the ideal entry. So we've got entry 1 and entry 2. So I may send both depending on how the market's open and how Monday goes. I don't normally trade Mondays specifically for swing trades because we often see counter moves on Monday and then the continuation of the overall trend on Tuesday, Wednesday, Thursday. And then Friday, we can often see profit taking. So we'll see how this goes. But again, I do really like the narrative for Euro Pound lower. Dollar Yen. Now, this one's a little bit tricky because there is an argument to trade this both ways. You could argue upside and downside. Now, the argument for downside is obviously we've got relative uncertainty in the markets. The US dollar has been losing value over the past couple of weeks. The yen's been holding its ground. Bank of Japan's on a path to normalization. The counter argument is tariffs are priced in. The likely scenario to come is more of a de-escalation than an escalation. We already know that Trump's got scheduled a call this week with China to iron out their tariffs. We've had a pause on the European tariffs as well. So we'll see how that develops. Obviously, if we do see a de-escalation in tariffs, we will more than likely see an outflow of the yen, which is obviously a safe haven, back into risk assets such as the dollar in this situation. Now, let me just show you this. There is there's an institution actually long or short. I can't remember. Let me just double check here. Yes, so here's a trade. If you want to screenshot this or write it down, you can do. So MUFG is currently in a short position on dollar yen. I'm not convinced of this trade. I think the dollar is oversold, and I am pretty confident that we are going to see a resolution in tariffs. Now, I don't have any hard evidence or hard news data or anything like that to say that tariffs are obviously going to end soon, but the dollar has taken a real beating. It's just a bit of a gut feeling, a bit of intuition, if you will, which obviously isn't the best way to go about trading, but there you go. So I'm not necessarily looking to do anything on this market just yet. So what I would like to see is one of two situations. We've got this 200 moving average in a bearish trend. So if we can see a break lower of this of these previous lows, so we see the break, the retest, we enter here and then continue short, I'd be more than happy to take that because I am bearish on the dollar yen over the long term because the Bank of Japan's on a path to normalization. The Fed is going to cut at some point. It might be delayed, but that cut is coming. So we will have that central bank divergence to really benefit this short idea. However, on the other hand, if we do have a resolution of tariffs and we see risk assets such as the yen start to get sold off, I'd be looking for a break of this trend line and then again a continuation back up into these previous highs. Now, 160, 156 to 160 in this area here, I think would be very optimistic, and I'm not sure that's very likely, but it's something to watch for. So I would be, if I was a buyer in this market, I'd be more trailing stops rather than having a hard take profit. You're in a long on euro dollar. Very nice. Well, let me know how that goes. Phantom, hello. I don't think you've missed anything. I'm not actually sure when you joined a couple of minutes ago. Not too much. Okay, so moving on. Gold is another interesting one. So I think I'm not. Oh, sorry, I don't think I'm not super bullish on gold anymore. So I think the big problem really that's facing gold at the moment is that a lot of the factors that were driving gold over the recent. I mean, look at the rise that gold's had. It's had a large amount of things to drive this market higher. We had obviously Russia, Ukraine, we had the Middle East, we've had inflation concerns, we've had tariffs, we had the election fears, we had a lot of, it was like a holy grail situation for gold to just rally higher. There was nothing stopping it, and there was no reason for it to stop. Now, if we just take a broader view, what's keeping gold elevated? Why would someone, oops, I didn't mean to click that. Why would gold really want to be something you're still buying? Well, central banks are still buying gold, sure. Tariffs are, not tariffs, elections done. Wars are pretty much priced in. Obviously, we've still got Russia, Ukraine. That's still a problem, but it's priced in. There hasn't really been any major escalations to reignite that buying of gold for that specific situation. Tariffs seem to be getting de-escalated. As I said, that could flare up again. I mean, with Trump, anything's possible. But as a hedge, so if I'm looking to go long on the dollar yen, and I'm looking to short euro dollar, that puts me in a position where if something does escalate with tariffs, I'm going to be in trouble because the dollar is going to lose value, euro dollar up and dollar yen down. So that puts me in this position where buying gold actually does make a lot of sense. Not necessarily from a speculative aspect, more just from a hedging aspect to protect capital. So I'm not necessarily going to look for gold to come back up to previous all-time highs, but maybe just back up to these highs here. That's reasonable in my view. Technicals look fine. We've just had this bounce off the 200 moving average and the 50 EMA. Sorry, not the 50 EMA, moving average and the 50% fib level, along with this level of structure here still being respected and this uptrend continuing higher. So again, we will see, but I think gold long is a great way to just manage risk and ensure capital protection. De-dollarization, yes, I mean, that is an issue. We are facing stagflation concerns, which we can maybe go into later on in this webinar. What's this then? The Aussie New Zealand, again, this one was on our research paper for this week, so feel free to go and cross-reference that if you would like to. So the RBNZ is on hold with a hawkish bias, signaling no cuts until mid-2025, while the RBA, so the Reserve Bank of Australia, is more data dependent and closer to peak. So that does put us in a situation where a short position could be quite nice, just playing off of that central bank divergence here. So I'd be looking for this 50% to 61.8 level. 61.8 level to continue lower into this fib extension around the negative 61.8 following this 200 moving average, which has just started into a bearish trend as well. We are obviously in an overall long-term downtrend as well. So technically, fundamentally, this market seems great. We are getting a bearish reading on the edge finder as well for the Aussie New Zealand. As you can see here, bearish reading, score of -8. So we've got the elite research paper that's forward looking. We've got the edge finder that's current looking, both with bearish ideas. And we've got the technical analysis that could present a nice short position here. So if we do get this level get hit, I'd be quite happy to go short again into this previous level of support down here at the -618 level. Keeping it very simple. Now, the German 40, the Nasdaq, the S&P, basically just the stock markets are, in my view, I'm not really a stock trader, so when it comes to earnings, PE ratios, all that type of, that's way above my pay grade. I don't pay attention to any of that stuff. However, from general consensus, these markets are very telling on risk sentiment. So we, again, just take a quick look at the Edge Finder. We're seeing these markets getting a very bullish reading. So we've got the Russell, which is essentially small cap stocks in the US. So we've got the Russell 2000, the S&P, the Dow, the NASDAQ, all getting bullish readings. And obviously looking at the recovery that these markets have had since tariffs were announced. I mean, look at the drop we had. It was like a 20 to 30% drop, roughly, depending on which market you look at. And specifically, the DAX actually has broken all-time highs after a huge recovery. I think it was an amazing recovery by the DAX. So I'm by no means looking to short these markets. I think that'd be very silly. So I think actually if we could have a pullback here on the DAX back into this 200 moving average and just ride this market higher, again, no take profit here, just trailing stops, let it run, and see if we could catch something that we could potentially hold for 2, 3, 4, maybe even 6 months and just let it ride to the upside. I don't see any issue with that whatsoever. Similar thing with the NAS. In fact, it's the same thing with all of them. I'm not looking to short at all. I will be looking for any opportunity I can just to get long in these markets. I mean, if you look at the historical price action here, if you feared every time we had a drop and you were trying to short the recoveries, you would have been in a world of pain. I mean, just look here. If you shorted this, you would have been stuck in this uptrend. Shorted here, again, you would have been stuck in the uptrend. If you were shorting, I mean, here it might have worked out actually, but you get what I'm saying. I mean, shorting these markets generally is a very, very difficult thing to do. So yeah, always want to be a buyer as a rough guideline. Pound yen is very similar to dollar yen, but I've got a bit more of a bullish idea on pound yen. So we've got the fib level here, obviously 61.8 in the 50% level, 200 moving average, which is bullish, maintaining this uptrend very, very nicely. So I'd be quite happy to buy this market if we can come higher. The Bank of England is sort of holding rates at the moment. And as I said, the yen, it's possible we're going to see an outflow of the yen if we do start seeing tariffs get de-escalated, which will happen eventually. It's just a matter of time. So we might mistime it. We could place this trade and then something happens, some sort of escalation happens and it dumps down slightly more. But eventually we are going to get that resolution of tariffs. It will become priced in. We'll have, it will be what it will be. So it's a case of managing that, really. What's your opinion on read bank reports stay up to date? I think it's a very imperative thing to do, actually. I think if you're an elite trader, you're paying to be here, and you're not taking advantage of what is quite literally institutional information, you're missing out and you're not getting your money's worth, to be quite honest with you. I would say I suppose the counter argument to that is the elite research. So obviously this is all aggregated information from bank reports. This is all just from bank reports. However, I only do this once a week because it's very, very time consuming. So if you want to stay up to date on like a Thursday, this may be outdated. So the best option for you is to read bank reports. And obviously, we don't charge any extra for that. So this isn't me trying to upsell you or anything like that. It's just genuine information. Many bank reports call Eurodollar as valid long. Yes, they do. But don't forget, and you know what, actually, let me just show you something. Let me just give me 1 second, because there was a good example of what you're saying. Yes, here. Okay. So when you talk about institutions, you've got to look at it from a sensible idea. Just because they're an institution, it doesn't mean that they're always the best people to follow. So let's take Credit Agricole, and this is a general rule I follow. The information, the analysis, and the data that these people or these institutions provide generally are unmatched. I mean, you can see here, Credit Agricole, Bloomberg FX forecast ranking. For Eurodollar, they are the #1 analysts or forecasters. Same thing for dollar Swiss. Same thing for dollar SEC. They're second for pound dollar. But if you look at that, then you go and look at their return year to date. They've underperformed massively. For 1 year, they've made 8.5%. So while their information can be good, their execution is very evidently quite poor. I mean, a 50% win rate, I mean, obviously that's not bad, but it's not worth putting them on a pedestal for. So I will continue to do what I do. I don't care if an institution's long on Eurodollar. I don't agree with that. So I'm going to play my own thing. And this is one of those situations where you've got to have trust in yourself. So if you can't take your own analysis and you can't take your own trades, Sure, you can follow institutions, that's great, but you're going to get underperformed by benchmark indexes. Anyway, sorry, I went on a bit of a tangent now. Let's get back on track. Yeah, yes, sir. Yes, sir. I'm actually going to make it. I've got a video planned to break down that exact topic. So I'm not going to answer that here because I would actually really like to do that in a real detailed view so you can get a proper idea. I'll try and get that out tomorrow, actually, so I'm not going to leave you in the dark for too long on that one. Okay. Is there any questions or any markets you guys want me to go over? My watch list this week is relatively thin, as we've just covered all of it. So what I'll do is I'll leave this on the screen for a second. Again, feel free to screenshot this if you would like to, if you don't have the edge finder. So we've got, again, risk assets reading bullish, Nasdaq, Dow, etc. Euro pound bearish, Aussie New Zealand bearish. Nothing overly interesting. However, again, if we just have a look at the econ. So what this does is the difference between what I just showed you, this top setups, and the econ is econ essentially is only the economics. It doesn't take into account the sentiment and the trend and seasonality. We can see Euro dollar is -5, Euro New Zealand is -9, Euro pound still -8. So these markets, just economic wise, they're great to look to trade. So you want to have a look at silver. Okay, I don't think there's any real data on silver. Let me just have a quick look here for you. Silver's not something I pay that much attention to these days. It's got a positive score. Oh, well, score of 3 actually. So from a fundamental view, silver is pretty flat. But yeah, we can have a look at some technicals. Let me pull this up for you. You know, I've realized in my old age, I've become a little bit of a boomer. I've realized it takes me so long to just type things and click on things these days. I used to be lightning fast on computers. These days, I'm a bit slow. Okay, so let me just have a look here. Technicals already actually look really, really nice. I mean, look at this 200 moving average here. Really, really nice support. Even from a sort of structural view, this doesn't look, I mean, it's not super clean, but it doesn't look bad. So we've got a relatively neutral score of positive, or was it +3? Let's also just take a quick look and see if we've got anything on the elite sheet. Commodities, silver. I'm not going to read all of it. I'm just going to look at the summary. Silver holds neutral to modestly bullish. Okay. Well, capped in short term by high real rates and firm US dollar. I think this might be in the same camp as gold, really. I wouldn't take this from necessarily a speculative view on silver. I would take this more from a hedging view. So if you wanted to go long on the dollar, let's say you wanted to short euro dollar or go long on dollar yen, silver may be a good option just to hedge off some of that dollar risk and let this market run higher, or see if you can get this market to run higher. Again, from technicals, it looks really good, but fundamentally, it seems a little bit uninteresting. Now, it's not bearish, but it's far from being a great plan, to be honest with you. Phantom UJ, to be honest, I've got nothing. We did cover UJ already. There's nothing here that's really piquing my interest from a fundamental view just yet. Just because this is heavily reliant on risk sentiment. So I'd really need to see what's going to happen with tariffs. Will we get escalation, de-escalation? From a fundamental view, relatively uninterested in my opinion. Exactly the same thing with New Zealand yen. I would prefer New Zealand yen short. Wait, hold on. No, sorry, New Zealand yen long. But yeah, again, because the yen is obviously a safe haven, we've seen a lot of volatility on the yen recently. It's not something I really want to go in for a swing trade on. CAD Swiss. Interesting. I haven't paid any attention to CAD Swiss either. Let me just take a quick peek under the hood. What's going on with the CAD? Canadian dollar carries a mildly bearish macro bias over the 1 to 4 week horizon. Soft domestic data. Dovish Bank of Canada. Okay, let's just have a look at what their rates are. where we Bank of Canada hold at 98% probability. The rate's 2. Yeah, it looks like the planning or expectation is sort of a continuation of cuts. Uncertain oil support. Yeah, you're long in all three. Makes sense. I kind of like CAD Swiss long. New Zealand yen long. I like. It's just dollar yen long. It's for me. It's just a little bit too uncertain. Anyway, hold on. Sorry, I just closed PMT. Let me just reopen that for a second. So risk sentiment at the moment, we're in a 68, so we're seeing active buying. Risk on environment is driven by geopolitical and macro uncertainty. Strong May equities rally, earnings beat and guidance, volatility and sentiment calm. So while the markets are relatively risk on, I mean, we've obviously already seen that in things like the DAX and the NASDAQ and the S&P. It's difficult to get real long-term positions on, in my view, which is why I've not sent any swings in a while, because it's just, you know, you place a trade, Trump says something happens, and the trade's gone. Whether it could be a good situation for you, but that's a 50-50 coin flip in my view, which I'm not happy about. I don't like doing that. Okay, so currency strength. We are seeing, yeah, as I said earlier, the pound has been doing phenomenally well recently. It's lost some ground on Friday. Over the 7 days, so last week, nothing overly impressive. Longer term, over the sort of the month low, been very, very good. Looking again to long pound Aussie, beginning of last week was very nice. Okay, pound Aussie, interesting. Let me have a look at the chart for that one. I think that would actually be a great trade. Let me just see. I may look to take pound Aussie actually. I kind of overlooked it completely, but having just seen you say that, it's kind of sparked an idea. Ooh, yeah, this H1 looks really nice. So H1's clearly upside, respecting this 200 moving average very, very nicely. Let's just see what higher time frames are doing here. So yeah, weekly on an absolute monster rally. The daily looks okay. Perfect. I've got an idea here. So what I would look for is a couple of different things. So you would either want to see this, which would be a 50% 618 pullback into previous structure. Obviously, we'd be looking for these previous highs here to get tested. Or if this is a little bit too pessimistic, but you could also look for a retest of this 200 moving average. You might be waiting a while. I mean, this is a daily time frame. But yeah, I think longs, just based on the trend, are great. We've got a strong pound. We've had the RBA. Actually, let me just quickly refresh my mind on the RBA. Where's it gone? Where's my notes? Yeah, RBA is more data dependent and closer to peak. Yeah, okay. Pound Aussie, I really like it. Actually, 2011, nice call. I'm going to add this to my watch list as well, actually. How important is currency strength? Not overly important. I like to see it just to watch the trends, just to see how currencies are performing against each other. But I don't use it to actively trade, really, at all. Phantom, yes, the technicals do look really nice. Pound CAD, dude, I think pound CAD as well, similar thing. If you're looking at pound crosses, I would honestly just look to go long. Sorry, I just saw a message. I was trying to read and talk at the same time. Yeah, the pound's doing very well. Canadian dollar, I'm honestly very mixed on it. It's really not something I trade at all. But yeah, okay, here's a quick note. If you guys are looking, let's say you want pound CAD, I would urge you to go and just read the summary. If you don't understand what all this means, just go and have a look at the summary. It will give you a very clear, is it bullish, bearish, mildly bearish. So in this situation, the Canadian dollar is reading mildly bearish. If you want to go long on the pound, which we've already discussed is doing very well, what does that tell us? Well, pound CAD long might be one to add on the watch list. So yeah, Deezer, I think that would also be a pretty strong one to look at. What's my main fundamental confluences? Main thing for me is interest rates. So what a lot of people tend to miss is let me just pull up this here. So what people tend to do is they will look at something like this, whether it be the Edge Finder, PMT, calendars, it doesn't matter. They will look and say, oh, we've had good news for the dollar. That's nice. And then they'll say, oh, I'm going to buy the dollar. Well, they're missing everything else. They're missing what is this central bank doing? Just because it had good data, it doesn't mean the central bank is going to be holding. So if we look at CPI, which is inflation, PPI, PCE, and then we look at the labor market, which is wage growth, unemployment, job claims, JOLTS, ADP, NFP, all of this is dictating what is the Fed going to do, or obviously the other central bank, depending on what currency you're looking at. But everything really comes down to the central bank decisions and obviously the real rate. So let's say the Fed is going to hike in their next meeting. Well, what does that mean? Why would we want to go and buy the dollar? Well, that pushes up the real rate, first of all. So the yield, so the return that investors are going to get from buying the dollar is much larger. So it already tells us that buying the dollar is going to return quite nicely. So we'd look, again, for something similar, something opposite, which in this case might be the euro, where we're getting a much lower real rate, meaning that we actually get a lot less for having the euro. So we might want to sell the euro, buy the dollar. Anyway, sorry, I'm going off a tangent there again. But yeah, main thing for me is central banks. And obviously the forward guidance, which is here, that's a huge deal. But that's a very sort of a long topic. So maybe I'll do a specific video on that one as well. Okay, so that kind of wraps up my my watch list. But if there's anything you want to ask me, now is the time. We can have a look at some markets together, or if you want to speak, feel free to. I think you raise your hand or ask to talk or something. I'm not sure. Okay, before you go, let me just make sure I'm not missing anything that I planned to discuss. Oh yeah, bank trades. I'll leave this on the screen for a second. So again, feel free to screenshot this if you want to see what they're doing. Yeah, okay, that is pretty much it from me. Sweet. Okay, so it seems like you guys are done. No new questions or anything. So I'm going to call it a day here. I hope this has been useful to some of you. Guys, have a great one. I hope you've all enjoyed your weekends. Hopefully, I can get some swing trades out this week. I think it's been a month since I sent a swing trade. So I do apologize about that. But personally, I would rather not trade and protect my capital and protect your capital when I'm not 100% confident in my idea. In this past month, I've not had that because of tariffs and uncertainty in the markets. So, guys, I'll see you very soon. And thank you for being elite traders. Of course, I'll see you all very soon. Enjoy your weeks.